Hey everybody, this is Tim Picciott, the Liberty Advisor, joined with John Sneisen, the Economic Truth. And today, this is an episode of the Tim and John Show. And we wanted to welcome all of our new listeners. I mean, over the course of, John and I have been doing this for a little bit over a year now. And what we did was, we started coming out with episodes, and we were initially just labeling like Liberty Advisor shows, or we were on World Alternative Media. And so pretty soon what we're going to do is on our podcast feed, it's going to be labeled as all the old episodes that we had are going to be, the pre-Tim and John show, kind of like the Star Wars type deal, like a prequel type thing. And then, but now we're rocking and rolling. Lots of great stuff that we've covered over the years. But most of our listeners have come, just in the past, month and a half. So whether it was from, Dan Dix, Press for Truth, or Sam Tripoli, or from World Alternative Media, or from We Are Change, if I forgot anybody, or James Corbett, everyone who's been on board, we definitely appreciate it. And what we're going to do today and we also want to welcome, everyone that came from Change the News, because what we're doing also is a Change the News segment, but this is going to be a Tim and John show. And what we want to start off first today, John, is I want to cover a little bit about, there's a story out of Reuters about the Shanghai gold boss wants super sovereign currency for post-crisis times. The president of the Shanghai Gold Exchange, or the SGE, called for a new super sovereign currency to offset the global dominance of the U.S. dollar, which he predicted would decline long term while gold prices rally. Concern is mounted among some market participants over the dollar-denominated system as the U.S. Federal Reserve cut interest rates to near zero and embarked on unlimited quantitative easing to contain the economic damage of the coronavirus pandemic. Future global trade needs a super sovereign currency under which no single country has the power to freeze international assets of another country, said Wang. When the Fed turns on the liquidity tap, the U.S. dollar will in theory, be in a long-term depreciatory trend, he said, even though the panic of the current crisis could trigger a temporary scramble for the greenback. Now, I do want to comment on that, that this is sort of a weird concept that you could actually see the dollar getting stronger as we're printing all this money. So I want to see if you could maybe kind of expound a little bit on that for us, John.
Well, first of all, the actual Shanghai exchange itself. It was, a couple of years back. It actually got put in place because what they wanted to do is they actually wanted to buy oil outside of the U.S. dollar system. So they actually set that exchange up for that. But also in that exchange, it's of course oil can be bought with gold in that exchange. So it's very interesting. The Shanghai exchange in itself, it's very different from the exchanges that are over here in
nowadays. Do they give you gold if you take your oil? Now that we've got negative oil prices, how did that work?
Yeah, no, that's work too well, unfortunately. But it's interesting how we ended up with negative oil prices as well. But that was an oversupply basically, so there was nowhere to put the oil and when they actually delivered on. And what do you do then, right? Like, you can't just. The thing with oil is you can't just shut off oil like you can with other things. If you shut things down completely, it might be hard to turn it back on again because it needs the constant flow and pressure in the systems, right? So that's a huge problem that we're having now. Of course, we had mass cuts, so oil prices are up again, around the world quite substantially again, but they're not anywhere near, what they actually were, back when oil was $140. I comes to think about the Norwegian Sovereign Wealth Fund that just lost 21% of their investments because they had almost 70% of their assets in global stock markets, of course, which was a very stupid move. I called it out, and this was like 2 years ago that I called them out on it. Of course, now they're struggling because they used to, because the oil prices were high at the time, last time when it dropped in 2008, they shoved in, they lost half of the fund, but then they shoved in oil royalties and oil money to cover the losses without telling the people that actually happened. But back to the US dollar standard, it's getting hits all the time. And of course, the US, I think one of the major reasons why the U.S. has, been, are being attacked now as, the world reserve currencies because the U.S. has, weaponized their currency and, threatening people if they're, not doing what the United States government or the shadow government wants them to do.
That was literally the
yeah.
very next line I was about to read. It goes, the problem with the dollar-denominated monetary system, he said, was that it left countries vulnerable to potential U.S. sanctions and Washington's power to freeze a nation's international assets in the event of a dispute. It is a weapon for the U.S., but a source of insecurity for other countries. Sorry about that, though. Yeah, exactly where I was going next with this, so I'm glad you preempted that.
Yeah, no, 100% it is, Tim, and that's the problem is that any empire, weaponizes their currencies and use them, to their advantage. And that has happened throughout history, with every empire around the world. They, of course, weaponize and use their currency. If you use it, now you become, the peasant on the farm, basically, as you have to use the currency as it loses value, for example, or as, they could just freeze it. Didn't have electronic transfer back in the day, but, they had more control by you using their currency, of course. But again, back to the United States, they kind of have. This has been an ongoing thing for years, because a lifespan of a fiat currency is around on an average 35 years. So what you're seeing now is you're entering that zone where they had the fiat for, let's see now how long is it, 71 till today. So we're almost at 50 years, right? 49 years that we had the US fiat dollar standard. And it comes to a point where like now, and that kind of brings us into what's next and what's happening with the what I call the periphery currencies, because that's where you see the havoc is going to start now first, which is all the other central banks around the world and their currencies are really getting strained right now. Because everybody's flowing into the US dollar still, because the US dollar is still, recognized as the world reserve currency and a safe haven for now. But the problem is when you do that, you get to a point where you actually, the safe haven becomes, basically a prison. And how are you going to exit out of the last, safe havens into something else? That's going to be the problem. That's what you saw in 2008, with US dollar racked up, and became really strong because everybody, pushed into US dollar denominated assets. But then, as the sell started, just wrecked everything. And that's what we're seeing right now. A lot of people believe that we're in, what's called a bear market rally. And it seems like it's starting to stutter right now because, if we go to trading economics and, actually on the front page there, it says that U.S. stocks drops on weak data. They're like, really? They finally dropped on weak data? Like, how much weak data do you need before they're going to drop?
Did they not get the memo that good news is bad news and bad news is good news? No one told them this, John?
No, exactly. They totally forgotten that. And it seems like they finally are coming to, the grasp of what they've done. Like this whole monetary stimulus that they had, it's just insane. Like if you go and look at some central banks' balance sheets here, Tim, like this is just horrid to actually watch this. And we're gonna go into, like, if you want to pull some of them up, Tim, you got them at Discord there. We sent them over to you. So if we take a look here, I'm just gonna pull them up myself so I could kind of be on the same page as everybody else.
Yeah,
here.
Just so people know, I mean, we do have a Discord server, so like all this information, I mean, just tons and tons of information. So we've got the Tim and John show. Now this is our own like internal show prep that's over here, but we do have, like a general section that just has, tons and tons and tons of people posting. And I want to give a big shout out to BitLord Doll, who has been helping me out by, just absolutely helping me out a ton by, going through and highlighting articles for me. It's just been, been super, super busy over here. So it's been very, very, very much appreciated. Reposting lots of things. So, if you want to help John and I out getting in on the action and also help yourself out too, because, there's just tons of great information here. I really highly recommend checking out that Discord server. Also have, in the show, let's see, an article section where we have, just tons and tons and tons of articles that we save every day. I mean, John and I are prolific when it comes to saving articles, and I used to do it on Facebook, but screw Facebook, those guys, a bunch of vultures over there. But getting back to John, I've got the Bank of Japan balance sheet pulled up right now.
Yeah, the Bank of Japan balance sheet is, let's see here, which one is that now? I just gotta look at the information here. Where am I now? Sorry,
I'd say it's the one that's going up a lot, but actually they're all going up a lot, and this one's probably not actually going up as much as some of the
No, it's actually, here we go. Yeah, it's quite weak. But what you're seeing is they just started the stimulus, so they haven't caught up. We don't know yet what they're going to be at, of course, next month after they did their massive run-up in stimulus. Now, of course, the Central Bank of the United States, the Federal Reserve, has a massive run-up. We went from the low when they had to exit back in September and start buying again. Assets, they were at, what was it, 3.7, I believe it was, and now it's at 6.6 something. So they really are, in a lot of trouble all around the world.
So it looks like I also might win our $20 bet too, at the rate things are going. Unless we have a huge day at the end of today, it looks like I'm pretty safe to win that bet then.
Yeah, no, I'm pretty sure you won that bet. Then what was the number again? I forgot what your number was. It was 7.
I believe I was 7.35, and I forgot what you were at, but
I think I was at 8, like around 8 somewhere. So yeah, no, it's. We thought because it was interesting with the balance sheet. Well, what happened initially, they were buying at the rate of almost 100 a day, $100 billion a day, which is ridiculous. Like compared to if you pull up the Federal Reserve balance sheet and then take a look at the historical scale, it's becoming a little blip soon. The 2008 crisis because of what happened with the run up of asset purchases that they've done. And this is insane because it's a lot of the asset purchases that have happened too has not just been by, of course, the Federal Reserve, the Central Bank of the United States. It's been of the U.S. Treasury as well. The U.S. Treasury put out about 1.5 billion-ish of purchases of ETFs and corporate bonds, which also they would purchase some that were deemed to be junk as well because of, if you were above junk for like before, the crisis, they would also, if you had like right below junk, they would still buy. So that's literally buying junk bonds. So now, of course, the ECB,
and so those are referred to as the triple B bonds, or the lowest grade of investment grade bonds. And that was like a major central tenet of my Anarchapulco speech, was how those were all going to be downgraded, or you'd probably see historically 26 to 30% of those downgraded. I mean, and I was going through and actually relabeling some of the old podcasts earlier today, and thank you also to Nicole, who's helping me out with going through and relabeling those. And we had episodes talking about how the ETFs would be catalysts for all this stuff. And so it's almost, it's like a trip down memory lane of just saying like all the things that we talked about and how so much, I think it was like May 3rd from last year I saw, which is, almost coming up the 1 year anniversary, talking about the subprime auto market and how that's poised to collapse. And boom, right on cue. And so it's just not like that, not the Q, so don't be conflated with the Q-tards, but but yeah, right on cue in terms of all of this stuff happening. And no offense to all the Q people out there, I think a lot of you are good people, but you've just been misled down a wrong path temporarily, and hopefully we can get you back at some point and not too far gone. But no, just trust the plan. Get the vaccine chip, get the microchip, get the UBI. Just trust the plan. Sorry for cutting you off, but I'm going to pull up your website right now too as you're talking.
Yeah, no, it's very interesting with of course, the balance sheet of the Fed is up substantially, but some balance sheets that have really taken off. And this is, I made these warnings, of course, like 5 years ago, I wrote the book, Canada, the Greatest Economy in the World, ? It was about 2 years ago that I did a report on the massive debt bubbles that would, entail in Australia as well, and the banking crisis that's coming there. And now we are right in it. But these two central banks are ridiculous. They almost have doubled their balance sheets in just a couple of months here. And going into that, like
which two are we talking about right now?
These are the two right below where you actually see there's a little gray writing underneath Tim them. And
I've got them pulled up, so I see we've got the Bank of India, we've got Norway, United Kingdom, Australia, Canada, Japan.
So
Canada, crazy.
Yeah, so it's become like pretty nuts. And of course, Canada, I warned about this massive debt bubble because we had almost 300% private debt to GDP in Canada. And it was a big problem. It was a huge problem for the Canadian economy. And nobody wanted to listen. Everybody's like, yeah, real estate is going up. Everything's fantastic. And now they were, just until like maybe a month ago, they were like, yeah, everything is going to be fantastic after coronavirus is blown over. We're going to go back to normal again, and real estate prices are going to go up. Meanwhile, real estate has, substantially dropped. I think it was 1/3 of Canadians are doing deferrals on their mortgage payments right now and all their other debt, which is basically they can't pay their debt, so they had to, postpone their debt. But of course, what happens when you do that? Well, the bank is still making interest rates and payments. They make their interest rates on it, right? So the bank is taken care of, but you are still actually racking up more debt by by the interest rate on that debt. So it's just interesting to watch these debt bubbles commence. And of course, now Bank of Canada and also the United States and others, they have programs now that they like TALF program in the United States and Canada. I forgot the program. I think it was secured lending something program in Canada, where they're buying auto-backed securities, collateralized loan obligations, and CDOs and mortgage-backed securities right now. So they're actually outright buying. Derivatives. And who? Well, I wrote about this back in when was it? I started back in October, warning about the CLO and corporate debt market collapsing. And of course, what are they doing now? Well, they went into buying CLOs around the world.
And that was like the one thing that
massive, bubble. It's interesting. Like some bubbles, have not been blown as high as others, of course, with real estate not being that crazy in the United States. But it depends on the country. Like there's debt bubbles everywhere in every single country. And, why are they so high? Why is the debt so high? Why did everybody rack up all the debt? First of all, it was not sustainable in the first place. And second of all, it was all made possible by very cheap interest rates by the central banks, artificially manipulating markets to keep the inflation going. Because how many times have we said this? And I've written about it in my book back in 2014. Warning about, there's never going to be enough money to buy off all the debt, pay off all the debt in the world. There's still going to be interest to be paid on that debt.
And that happens from day one because the money is debt. So 100%. If the money's backed by debt, there's no way to get out of debt if the money is debt. And so by printing more money, you're getting yourself further into debt. And since the debt has interest on it and the money doesn't, there's always going to be more debt than there is money. And that's just like a mind-blowing concept. And if I talk really fast, you should just go back and rewind that and play it 5 times in a row and try to figure out what I just said, because let me just slow this down. So if you print $1, the first dollar that gets into existence, December 23rd, 1913, there was 3 or 4% interest on it. I forgot what it was. So if you have interest on that money, and let's say you lend out $1 and then you owe $1.04.
Fair, right? This is $1. We're going to do a visual example here, okay? This is $1.
I know. I like my. I've got my God Emperor Trump dollar. Now, John can't see it because of how we're filming this right now. But I've got my God Emperor Trump dollar. I also had on screen earlier. I had the everything is awesome from Lego movie, because everything is cool when you're part of the team, and the team Federal Reserve is printing money, further enslaving people. But it's that concept that the money is debt, and it's not really money; it's currency. So our currency, we have to, it's private central bankers that we have to, basically beg for permission to get our own money, which isn't our money; it's their money, and we're borrowing it. And until people address that issue, like I don't care about any other issue in the world, because the fact that we're still slaves is the biggest issue in the world to me, John.
Yeah, it is. We're all slaves to this whole monetary system that every single central bank in the world has. And as you can see, these central bank balance sheets, they're hockey stick in most of them. And of course, there's one here that doesn't show, like a lot of them doesn't show too far back, right? So you don't get to really understand like how it's hockey sticking. But as you can see here, the ones that are going back to the 60s, right? Like you can really see that we're in that hockey stick moment that if you go and look at currencies throughout history, they always fail this way. And then you have the last hockey stick moment at the end. And that's where we're at right now. And people should be very forewarned about, what's coming. And of course, there's massive deflationary pressures that, will collapse all this. But what we got to take in account is, of course, guys like Ben Bernanke and the thoughts behind, the Federal Reserve and so on. They have said, that, deflationary pressure will always be beaten by the printing presses. So there you go. Like that's their whole, solution to a deflation, which is their worst nightmare, because now, the debt becomes extremely unsustainable to pay back ever.
Yeah, better yet, we're going to be We the people are we get the ones who get beaten down. But we've only covered one article out of about 40 or 50 that I wanted to cover. We've got limited time today, so we can kind of move on a little bit. So we got the global clout of the United States will reduce while the status of the European Union and China will rise in global affairs. And this is still, if we go back, it's the same article out of Reuters. Shanghai gold boss wants super sovereign currency for post-crisis times. Now, one thing I was just thinking about is, now that the U.S. is trying to weaponize all this, what's to say that, because there's been a big move too. I've seen people saying, oh, well, this, China caused this pandemic that's going on right now. So, what we should do is just default on all the debt to China. And then, do you want to get into like some of the reverberations and some of the, unintended consequences of doing a move like that?
Well, if you go and default on a debt somewhere, right? Like now you're going to have a massive cascade of events happening because somebody owns that debt, right? And it's not going to be payable. So what happens with that now, they're going to have to sell off a mass amounts of assets to be able to cover those shortfalls of that defaulted debt. And so you're creating like a massive cascading sell-off if you did something like that in the markets, and it's really going to devastate anything around the world if one country goes and just go bankrupt on that, of course. But it's interesting how everybody is China has the same thing as same thing as the IMF, which is the Asia Investment and Infrastructure Bank, the AIIB. Which is, borrowing money to everybody around the world. And now, of course, China has been talking recently to Lebanon, to Venezuela, because in Lebanon now they're talking about actually, coming up and selling off and be able to actually get an IMF loan now. And of course, that's the worst thing you could do. The IMF is a loan shark, basically, that, takes, basically they indebt a nation and then they take their assets after they can't pay because they knew that they couldn't pay. But it's a great way to, help, emerging markets and help, the third world by, first indebting them and then stealing all their assets after. It's a really great thing that, the IMF has done. And of course, this is nothing new that, when you have somebody defaulting on their debt, you're going to have massive ramifications around the world, no matter what. If just one nation goes down here, people are going to start seeing that, oh, maybe I should default on my debt because I don't have any, I can never pay back my debt, and then you're going to have a cascade of countries, on top of that. And so the cascade and deflationary pressure that will create will just be so substantial that you're really going to have to get into some extreme money printing and the balance sheet of
and
central
who's going to
banks.
want to lend us money again if we see like what we can do? Be like, oh, well, we're just not going to pay you back. And so, but ultimately, this was predicted by, I think the guy's name was Robert Triffin, who is called Triffin's Dilemma, that while you have a reserve currency, that you need to have liquidity. That liquidity means you're going to have to run deficits, especially in a debt-based economy. But then that need to run deficits will eventually, on a long enough time horizon, basically cause that currency to collapse. And this has been, well known since, before they even really even implemented all this stuff. I do apologize if you guys hear my dog barking. I'm not sure if you can hear that, John. There's literally a fire truck outside with guys in masks running into my neighbor's house right now. The house is not on fire, but my neighbor's always got some sort of hypochondriac health issue, making up stuff, and now my dog's going nuts. So apologize for
that's fun. Well, actually that drives us straight into the next article if you want to pull it up, which is about the Canadian government running a stunning $252 billion deficit.
Well, let's still, while we're still kind of on gold, let's still, so we did have that article where the world's oldest gold trader is closing, and this was Scotiabank. Yeah. And it looked like the reason for this is that it all came crashing down in 2018 following a historic money laundering metals rehypothecation scandal that wiped out nearly 350 years of good reputation overnight. Sources told Reuters that Scotia would not take on new business and would wind down existing activities by around the beginning of 2021. Do you want to maybe get into a little bit about rehypothecation and what that means?
Well, that's basically just taking and selling gold that you don't have, right? If I'm not mistaken, Tim.
Or it's right? Where, let's say you have one gold bar, but then we say, okay, well, John owns that gold bar, Tim also owns that gold bar, Bob owns that gold bar.
So it's a basic, it's what the COMEX does, right? Where they have anywhere from 300 to 1,000 contracts.
Allegedly.
No, exactly. We don't know exactly what they have, but that's the schemes, and that they actually got caught in that. I remember there was a big thing on the CBC here. They have like investigative journalists that did something on gold, and they actually looked into the wall. So it's like, hey, where's the gold? That there's no gold there that you promised to everybody. And of course, the Scotiabank, among others, have been, involved in manipulating the LBMA and the precious metals markets. They were caught in that together with Deutsche Bank and a couple others. Saxo, I forgot exactly who was involved there. But so yes, Scotia Makata, which is the oldest bank in Canada, of course, from Nova Scotia. They're in some serious trouble, but of course it's not just them. All the banks here are in trouble, and of course. When the Bank of Canada, the government of Canada is actually running a $252.1 billion deficit so far this year, that they actually have created, which is just whooping because it doesn't sound much like compared to the United States, but compared to what they actually...
That's like a normal month about these days. Well, I mean, it's about double normal, but what normal used to be. Now, I guess it's the new normal, so...
Yeah, but compared to what they used to have as deficits, 16 to 20 billion, like that's over 1,000-fold increase in... 1,000% increase in deficit. That is stunning. That's just beyond stunning when you look at it that way, instead of just looking at the numbers. And of course, Canada also used to be a substantial gold holder back in the day, and this is from my book in 1965.
And they sold out in at $300 or something.
Yeah, well, in 1965, what was the gold price back then? That was not very much, right? But they used
I don't know. I think that was I think my dad was only 1 year old in 1965, so I'm not sure.
No, but it was 1,023 tons that they had. Then, of course, they started to sell off, but that now ended it with them not having any gold whatsoever. They're at zero basically as of 2016. That was the last, part that I managed to get into the book here. It was zero. Same with other countries too. A lot of countries sold their gold back in 2001 to, because there was a massive pressure rising again after the 80s. There was another massive, rise potentially that could happen in gold, because gold is looked at as a asset for risky times when there's, the fall and a lot of problems in the economy. So people, flow over to gold assets. And of course, gold assets was tremendously increasing, but then central banks actually had a sell-off scheme where several major central banks around the world sold a huge amount of gold onto the market. And I actually looked at the number from gold.org, and I saw this trend where they, actually all of them started selling off gold during that time to then prevent because gold was rapidly rising. And we could have had a crisis at that time, and then they, manipulated and circumvented that by selling gold. And of course, again, in 2008, we had the same type of crisis in the monetary system. They racked up mass amounts of, that they put on the central bank's balance sheets. And now they're doing it yet again. It goes to a point with central banking throughout history or any fiat currency where you can keep on printing. But because some of that money will trickle into the economy at one point, there's going to be, and we already see that on a massive scale, the huge disparity between rich and poor. Of course, we're lucky we're in the middle class, but the middle class is getting, mauled right now as well with, a lot of debt. And we're seeing some severe crisis where, the more they, keep on printing and making all this money around the world, you're going to see the diversion between rich and poor just become greater and greater. And it comes to a point where you have, like in France, where people are out protesting because they can't feed themselves, because they don't get paid enough to put food in their mouth. And that's the breaking point, throughout history, where people will stop using that currency and go to alternative currencies and money, like gold and silver, maybe cryptocurrencies. And they will see that as a solution to the massive, losing value. And if you go to any central bank, I looked at this Norwegian, Swedish, and Canadian central bank. I was at Bank of Canada's museum. They have like a placard saying that, central bank is here to make sure that the value of the Canadian dollar is stable. That is the biggest BS ever. What a lie, Tim. Well, what a lie by central banks putting something like that on their website.
We should do like a road show and just like do shows from all the central banks outside of there. Go to the Feds, at 33 Liberty Street.
Yeah.
But one of the other interesting things from this article, the last thing I want to point out, is it says that the gold trading in London is estimated to be worth $5 trillion a year, resulting in some fat commissions for all that involved. So then what I did right before we came on here is I said, okay, well, how much gold is there in the world? The best estimates currently available suggest around, almost 200,000 tons, 197,000 tons.
Mm.
2/3 of that has been mined since 1950. And if every single ounce of gold were placed next to each other, the resulting cube of pure gold would only measure around 21 meters on each side. And so for those of you who are listening, we do have, the infographics put up here on screen. So then we also, if you go to the usdebtclock.org, they do have a spot at the bottom where it shows different gold holdings that are available. And that's what's crazy is China's got gold demand by country in ounces. China is at 26, almost 27 million. India, 23 million. Japan, actually, I didn't look at this for the first time, negative 430,000 ounces.
Well, they're true. They're the antithesis of a actual paper economy and electronic fiat economy, though. They printed
yeah, no, it's insane. So then I looked up, okay, well, how many ounces are in a ton of gold? About 32,150.7 ounces in gold. And I was using 1,700, just rounding for the gold price. And then that almost gave us close to $11 trillion of gold that's been mined throughout history. But how the F is the gold commission's $5 trillion a year when the market's only worth $11 trillion? It's like it's all this pushing back and forth. So all these fat cats just make a whole bunch of money off all the premiums and the spreads and rehypothecating things back and forth. But I don't know if I'm reading this wrong or if somebody in the comments, let me know if my math was right on this, but $5 trillion a year in different, gold trading. But yeah, now I don't know if that's, but yeah, when it says the business is estimated to be worth more than $5 trillion a year, I don't know if they're talking about the value of the actual company itself. Like if you're taking the net worth of the company and the balance sheet, or if you're talking about the commissions, you're talking about the revenues they're making. So, I would like to dive into that a little bit deeper at another date, but just, I know we are, only have got another 20 minutes here, so we'll move on from there. And, while we're still on gold, let's just mention that the gold silver ratio, insane right now. The average right now is 113.26, which is pretty freaking insane.
Yeah. But Tim, the actual physical price, if you look at the physical price, it's more like 70 actually. Apparently, if you look at because that's interesting. So that's actually showing the real price, not the fake paper price that we're getting told by the US dollar price, right? So it's interesting. But then, of course, every other country in the world is near or at record highs. Of course, and they've just been beating record highs like every year now, over several years. And you've seen this is the whole thing. Like you'll have the collapsing periphery economies, as I call them, first before you actually have the biggest Ponzi scheme that runs them all, which is the Federal Reserve going down.
Yeah, without a doubt. And so one other article over here that we're getting up on screen right now is the Bond King. This is Jeffrey Gundlach of Double Line Investments warns the stock market could hit new lows amid social unease. This is actually one of the guys who is probably worth following out there. There's I don't think there's like a ton of people worth following. Obviously John and myself, because I'm so humble over here. But Jeffrey Gundlach is another very, very good guy to follow, and he is certainly in the camp that we are not out of the woods. He thinks a retest of the low is very possible, and people do not understand the magnitude of the social unease that's going to happen. Gundlach explained, this guy's been right in the money so many different times, like when the 10-year was down last summer and selling it right at the perfect time, and he's been obviously past performance indication future returns. I used to have money invested with him. I do not anymore because we're running money in-house over here, and I might say we probably did a lot better than him because he's mainly just in bonds, and so we got to ride it up last year, and then this year basically didn't ride it down at all. So so anyways, we got that going on for us. But if you do want to become a client of mine, go to the website and sign up and where you can get on my calendar, because that calendar is pretty freaking full right now for the next 2.5, 3 weeks. So maybe it might even be about a 2.5 week waiting list just to be able to see if we're a good fit or not. And then even my assistant is on about a 2-week waiting list too. And then we're trying to bring on more people, but guess what? a lot of the things, the people we need to go to in order to get them approved are shut down, or they can't take the test to become licensed because it's not essential. So like all the Prometric testing centers have been closed down. Just more. And then the thing is, we're only hiring other like anarchists, voluntarists, libertarians. So I'm not just taking anybody. So, finding people that are motivated and have that mindset are tough. But no, that's just a quick little commercial. But yeah, I just want to let you know that if you do want to become a client, the waiting list is getting longer and longer, which is why I was trying to pimp it so hard months ago when I wasn't super busy. But it's a good problem to have. And yeah, we are growing over here. But at this level, this is Jeffrey Gundlach. He thinks the upside and downside is very poor. I don't think it could make it to 3,000, talking about the S&P 500, but it could. I think downside easily to the lows or beyond. The S&P hit a low of 2,192 on March 23rd before rebounding about 30% as the Fed rolled out its historic stimulus measures. And then, we got a CNBC article over here. The U.S. will need to spend trillions more as economy takes until 2022 to fully recover, according to the CNBC survey. And it's saying a third of respondents think the economy won't be restored until the second quarter of 2022. More money is going to be needed from the Federal Reserve and Congress. What was that? More money? Did we hear more money? Lock the load, baby. Woo! So gotta go pick that one up. GDP will decline by 24% this quarter, and respondents to the survey predicted. Actually, I read that wrong. So they will decline by 24%. That is what the respondents think. And then the rates will remain at zero for the rest of the year. Guess what? The rates are remaining zero forever. The Fed funds rate will remain zero. This is a point I've talked about a lot, but I know we have a lot of new listeners. So the Fed funds rate only controls the interbank lending rate between the banks. It doesn't control anything else in that. So if you're a bank and you need to go borrow money, if you end up going to the Fed to borrow that money, which banks don't do that, they actually trade money back and forth amongst each other, and they sort of use that as a benchmark. But that whole thing broke down around September 17th of last year. And so what I recommend is go check out the episodes right around like September 13th through the beginning of October. I had several episodes where we really hammered on that point in great detail. So I don't want to, I'm like losing my voice over here because I never shut up. So I don't want to belabor that too much because it's been done so many times before. And then with the Fed's balance sheet already at an unprecedented $6.45 trillion, the 36 respondents rising to an average of $9.8 trillion. I'm not sure what time frame that they see that they see that getting up to $9.8 trillion, but it's going to get to $9 trillion, then it's going to get to $20 trillion, then it's going to get to $50 trillion, then it's going to get to $100 trillion, then it's going to get to a quadrillion. Then it's it's never going to stop. There's no way out of the current situation. And guess what? If the Fed couldn't pay it down during the best economy in the history of the world, then when the hell do you expect them to pay it down? When all the shit's hitting the fan? You think they're going to pay it down? So, this is a point that we made so many times, like in this run-up of like the MAGA. And, other disconcerting news going on, that kind of plays into this thesis is you've got frontline workers unite, Amazon, Walmart, Target, FedEx, and Instacart. I don't know what the frick Instacart is, but somehow they're on the same level as the other ones. But they are going to hold an unprecedented strike on Friday over the virus. So yeah, it's funny that apparently you don't get coronavirus if you're working for one of those guys, but you do if you go to a church or you want to get your hair cut or something else. Then you got to be worried about the corona AIDS, John.
No, and this falls actually right into something that I have right in front of my screen on tradingeconomics.com. U.S. personal spending falls at record pace. So it says there personal spending in the U.S. dropped 7.5% in March compared to the market that they expected a 5% fall. It was the largest decline in personal spending on record as the coronavirus crisis forced businesses to hold activity and consumers to stay at home. Private spending accounts for more than 2/3 of the U.S. economic activity. So this is the reason why the actual stock market had to react down. But as you can see, the Nasdaq is only net right now as I speak. It's negative 0.12%. So and of course Dow is down a little bit, but it's not really reacting to that. Show, like the 2/3 of the U.S. economy just dropped 7.5%, and whatever. It's a little bump in the road, right? That's very interesting that how, the stock markets in the United States didn't react that much, to this negative news. And of course, that falls into the prop up of the economy. Buy all this, debt being bought and everything, and then they give people fresh loans to go and dabble in stocks and bonds and everything. And
speaking of loans,
M3 in most countries, or M2 in the US, has raised over the last month or so now. And you're not seeing a slowdown there. But the other thing that's actually slowing down is the monetary velocity. So the actual how fast money is moving around the world. And it's at record lows right now. And money is not moving around.
And that's why we're not seeing the inflation that everybody was fearing. So I don't know if you can find any charts in the M2 money velocity. But
yeah, I'll find it right now.
Yeah, but one of the things that's also picking up now is the wave of repos imminent as subprime auto buyers start missing payments. And I mean, this was also something I talked about at Anarcha Zona, like April. I think the first video I ever did for World Alternative Media, where we were talking about, the fact that it was a record amount of Americans that were 90 days or more delinquent. And so, MAGA, I was trying to make the case that this is obviously not the greatest economy ever, if that is the situation that's going on. Especially, just think about it. People are definitely going to be more inclined to pay, the cell phone bill and the car payment, and food, obviously. I guess people have food stamps. So, those two are the two biggies that people are not going to miss. And so, it went from people buying cars, in cash, to then buying cars on 1 year loans, to 2 year loans, to 4 year loans, to 72 months, to 90 months.
8 year, 10 years, right?
Yeah. And so and now you've got assets that if they were to repossess them, the assets are not even worth, anywhere near as much what they owe. And so they're like, screw it. I owe $15,000 in this truck and it's only worth $7,000. So yeah, go take it and, go have a ball. And then there'll be so many of these trucks or cars or vehicles on the road that aren't worth anything, and then they'll end up, cratering that market unless they come up with some new bullshit, cash for clunkers type thing that they came up with last time, which, I think they ran out of money. All that did is make it harder for poor people to afford cars, because now, what would happen is that those other cars, if we didn't, all things else relatively equal, those cars going back in the market would then saturate the market, would cause the car prices to drop dramatically, and then poor people could afford cars. And so, basically all the policies they want to do to help out, poor people in the war on poverty actually makes things much more difficult. And so, and I love when Janet Yellen's like, the number one thing that I focused my entire career on is, income inequality and why people are poor. I'm like, people are poor because of you fucking assholes. That's why, that is why you guys, why people are poor.
Yeah, and it's 100% true. They're the biggest scamsters in the world that have ripped everybody off. Now everybody's poor and starving because of the terrorists, the monetary terrorists at the Federal Reserve, because that's what they are, Tim.
How did you know we were going to bring up a monetary terrorist next? So we have Mnuchin says, highly unlikely the Fed will buy stocks. And that's in a quote. Poorly managed states won't get bailouts. And so there we have Mnuchin, Mr. Former Goldman Sachs boy over there, who they're already sort of buying stocks, and the fact that these big banks can use stocks as collateral. So they use stocks as collateral to get money from the Federal Reserve. So the Federal Reserve is then essentially holding on to the bag of stocks while the banks have cash. And ergo, basically the Fed is buying stocks. Not technically, but I guess it's more semantics. But I don't trust this guy as far as I can throw him. I have a terrible shoulder and I can't throw very far. So that's all I've got to say about Steve Mnuchin over there.
Yeah, and of course it's going to end up with a bailout of. I think they're going to just keep on bailing out the states now, because the states can't go bankrupt, right? If one goes bankrupt, then they all go. And actually, Tim, I sent you the M2 monetary velocity chart from the Federal Reserve in St. Louis that actually pulls the stats. And if you can pull that up, because they actually got the new data in right as of today, I think, because I looked at it a couple of days ago and they had 1.4 something. And it's, as you can see, the actual physical currency, moving from hand to hand is, drastically dropped. And the trend is here, look at the 90s, right? Like that was the peak in about, the peak was right around, let's see here. It's right around third quarter in 1997. It was at 2.198. It was, money was flowing around in the economy. The economy was kind of real, and things were going pretty good in the economy. And then after that, you see, every single crash, the monetary velocity just slows down. And now, of course, it's just plummeting because the coronavirus and all these bailouts that, they're buying up all these stocks. The banks, then keep their deposits just stuck at the Federal Reserve, earning a tiny little bit of interest on it instead of lending that out to anybody. So that's what you're seeing. So that's why the monetary velocity, the economy has slowed down to grind, and nobody is, sharing any money around. And I think it's just going to keep on plummeting until this whole collapse of the monetary system is coming.
Yeah, I mean, they're creating a zombie situation, and the more money they flood into this, and the worse this situation ends up getting. And it's a very weird paradox that you can get a deflationary spiral from printing a bunch of money, but I think it's going to go deflation, then inflation, then who knows, one day it's going to be over and it's going to be hyperinflation eventually. I mean, I'm not saying it's going to be tomorrow. And in the short term, I think the dollar is going to keep getting stronger, which is sort of a paradox. But this is on our Discord server, so if you guys want to join the fun, definitely would recommend that. You guys go to the general section, hang out in there, or we've got all the articles John and I share, and we do have some crowdsourced too for like Change the News. Tim and John show, we've got crowdsourced there. So if you guys want to say, hey, we think this is a good article for you, we'd appreciate that. It might make it on the show. And I know that BitLord Doll has been, prolific in sending me different stuff and helping highlight articles. So definitely want to, just give him another shout out over there. But yeah, it's in the link, we'll include this down below, but it's bit.ly. So it's a bit.ly link /Tim John Discord. So bit.ly/Tim John Discord. And that will get you to where you need to be.
Yeah, no, and the Discord channel is great. We have a lot of fantastic, smart people on there. On top of us, of course, there's so many great minds there that are sharing information. And of course, people are traders there, they're business owners. So you get a lot of input from around the world, and it's not only Americans and North Americans. It's a couple of people from around the world as well. That so you get a real good pulse on the global economy, what's happening in other countries that you're not getting told about, right? So it's, just a fantastic, I just love this group because it's, that's what guys like me and Tim, we need you guys more than ever, because it's hard to, talk to people today because not very many people care about these things.
And it's also, making these podcasts is not, a full-time job for us. And so people are like, well, how come we don't do this? And how come we don't do that? How come we didn't do this research? I'm like, because I'm doing a million things. Like, that's why, so, so if anyone, we do appreciate all the help we are getting over there. And like Anthem, speaking of gold, Anthem Blanchard's been in the group sharing tons of stuff. So definitely appreciate his participation in there as well. But do you have some of the articles you want to talk about as well? I've got yours pulled up here on screen. Yeah. And so.
Actually, I have a couple more quick that we can run through here. One is, of course, South Africa and how they are getting down. They've been downgraded to junk and further into junk now. And what that means, we were just talking about it earlier in the podcast about the double B, basically, plus is no junk status, because that means that actually pension funds won't touch your bonds or investments in your country, which is a huge significance in this world. And of course, that's what happened to South Africa.
And if it's double D's, then Joe Biden will touch it. So who knows?
Yeah, I guess the whole world will end up in double D's here, which is basically the default. Like, I think it's just D, but yeah. Anyways, that's where a lot of countries are ending up, and it's funny. I go down the list here of ratings. Actually, right now, what do you call them? South Africa is a double B minus. And then there's countries that me and Josh actually talked about a lot in prior videos. We talked about Suriname going bust. They are in triple C plus. You have Venezuela's gone bust. We've talked about Zambia going bust, which has now a triple C rating. So it's funny how like a lot of the countries in Puerto Rico is of course in total default. Republic of Congo is in triple C rating.
I'm looking at moving to Puerto Rico next year. So, you want to always, everyone's like, oh, we don't want to go there because it's been devastated by all this stuff. I'm like, that's when you do want to go there. That's when things are going to be cheaper to pick up. And then if I can get out of U.S. income tax, most of it, legally by moving down there, then, I think it's.
I think a lot of countries are going to be interesting because we have a whole bunch of countries now. Like, this wasn't like this when I looked like a year ago. Like, now we have Angola, Argentina. I'm just going to go quickly through the names there. Congo, Ecuador, you got Grenada. So now you're seeing the periphery economies. They're starting to default and go into default, right? Lebanon, you got Mozambique struggling. Puerto Rico's, of course, in default. You got Suriname. You got Venezuela and Zambia. So there you go. So there's a lot of countries that are really starting to struggle right now and are going into debt defaults or nearby debt defaults where they basically can't pay. And a lot of that debt too is not yielding very high to him on top of it, which is just ridiculous. You know, how
I've heard
like
the
countries
saying.
like Italy.
I've heard the saying, it's like picking up pennies in front of steamrollers. And so, I mean, if you're sitting in bonds right now, now there are some reasons why you might want to be in some short-term bonds right now, especially if you've got over the $250,000 mark. But, there's so many different things you can be doing, especially if you're looking for income, you're looking for safety. This has been a message I've been talking about since literally 2010, knowing that there would never be a day where the rates rise, because as soon as they do rise, and that would then lead to the stock market selling off, which would then lead to them having to renege on every single thing that they talked about before, which is boom, exactly the situation we're in. So just another reason to go to libertyadvisor.com and schedule if you are an American. Unfortunately, I cannot work with Canadians. Maybe John could do some, consulting with you. I'm not sure or not, but I don't make the rules on that one. I really wish I could help out the people in Canada, but for some reason they, the powers of peace said that is too difficult right now. I can only work with the tax slaves, confined within these borders for whatever reason.
Yeah, no, that's how they, keep you in. And of course, you got the accredited investors and all that, that you get labeled so you can't participate in really good investment opportunities, right? And be able to get up. So basically, they're holding you down for your best interest. They're holding you down so you can't participate in good investment opportunities, right? So I think that's just a big scam as well. But Tim, I know that we're getting close to running out of time, but I wanted to touch upon this, which is, of course, I shared 3 articles with you on that is oil related, because oil, as we known, and you've been reporting on this the last week, have been in the negative. It's been all over the place, right? And so actually Canadian oil well drillers have to turn to geothermal in effort to make sure that they can actually have sustainable rigs to work because the energy input versus output, right? The cost of it all. And that's why you had the frackers in the United States, one after one now is going bankrupt. It's because they were so heavily leveraged. And that was the only way, with having massive amounts of debt, that they actually could be profitable. Not that they're profitable if you have massive amounts of debt in order to be able to sell the oil, right? But so that's what's going on in Canada. And then, of course, another big one is, of course, Shell just cut its dividend for the first time since World War II. That's another one. That's actually, it's interesting. Royal Dutch Shell is, of course, owned by the Dutch royal family, most of it, interestingly enough, right? So you see they're still, have ownership of that. And then, of course, this is, we were talking about this. We started the whole podcast with this topic. Trump told Saudis, there's a special report, apparently, that says that Trump told Saudis to cut oil supplies or lose U.S. military support. Well, what do you think about that one, Tim?
Yeah, I mean, it's just so crazy. Cut oil supply. I mean, did he not get the memo that they're basically propping up the petrodollar? And so, I mean, it's such a weird game that they're playing. Before he comes in office, he's criticizing, the Saudis over 9/11. Then he's going over there and basically, praying over some weird ass orb, doing some weird stuff. That
was interesting. Yeah.
Yeah, and I think there's like a South Park thing too about that as well. But I think the last thing I want to talk about is, the stupid ad blocker, is we're doing this live. So we've got, one of the articles that you shared actually was the Warren Buffett stupid ad blocker. Anyways, what is going on with the Warren Buffett indicator over here is his favorite indicator is the Buffett indicator divides let's see what it is, but unfortunately, the stupid.
I believe it's GDP on the share of the stock market, right? Like on the market cap of, I forgot which stock market. But so what's happened with that, right? Like it's where we just dropped, like, what was it, 4% jumping negative in the United States?
Yeah, negative 4, yeah. 4.7, something like that.
So there you go, right? Like right there. And that's just the first quarter, which was not really like, the US hasn't really like shut down until March, right? So you are not going to see that big of an impact. The next quarter is going to be the one that's just going to be devastating when those numbers comes out. But yeah, so the Buffett indicators is now, because, GDP is dropping drastically, now stocks are looking more and more overvalued by the day as they keep up, keep going up.
Yep, I pulled up on a different browser, but the Buffett indicator divides the total value of publicly traded stocks by quarterly GDP. It is probably the best single measure of where valuations stand at any given moment. Buffett wrote back in 2001. The famed investor and Berkshire Hathaway boss said it was a very strong warning signal when the indicator peaked just before the dot-com bubble burst. And right now, it is at an all-time high, signifying that probably not a great time to be in the stock market. So if you have an old 401k, IRA, about to retire, just retired, why don't you, give us a shot over here with one of the guys who, I literally gave a presentation last year called Crisis Retiring at Acapulco. And if you would have followed that advice, you'd be sitting very, very pretty right now. And so, past indicate, blah, 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 blah. The past performance indicates future returns. But anyways, there was another story too that I saw where it showed, Buffett. I'm trying to, scroll through a bunch of different screens over here, but he was going on and saying, he's giving some real folksy story, when I was looking at buying Bank of America, I just went in and I called up the call center and they wouldn't put me through. And so it's just look at old Uncle Warren Buffett, always eating an ice cream cone, just calling up the regular Bank of America call-in line. He's just a normal, everyday guy, just like you and me. And so you can see this whole big PR rollout crap. But the last thing is, boom, over here we've got 9 in 10 Americans are concerned about an economic collapse. I think as they should be. And then we also see Americans' retirement accounts drop during coronavirus, obviously. And then how much the average account, it's dropped by 14%.
Yeah, the problem is that everybody's buying back in. They're buying the dip, they're following, who was it? The United States, Ludlow and others, are coming in. It's buy the dip.
Well, they know that the stock market has a huge correlation with the presidency, and so all they can really hang their hat on. And what they were hanging their hat on the entire time was this, and it literally was the main thing I was warning about. The main thing I was warning about was do not hang your hat on the stock market. That's a very dangerous game. You're playing with fire. Live by the sword, die by the sword. Well, guess what? You know what? The stock market's down. You just died by the sword, Donald Trump, metaphorically speaking. And, I think that, they did a lot of crap to get it back up to, on the Dow, we're looking at 24,330 right now. The S&P, we're looking at almost 3,000. It's crazy, 2909. And, I would expect that this would be, again, not financial advice over here, but I would expect that, we're probably closer to the highs of this, phony recovery that's just been, predicated on all this money printing and just unprecedented amount of, chicanery and just, for lack of a better word, I guess, crap that's going on. But we do appreciate, everyone joining us today. We've got John Sneisen at theeconomictruth.org. You guys can find him there, all of his links, everything that's coming. Do you have anything coming up? I mean, I know there's pretty much no events going on anymore. So
no, there's no events. There's no events, but please check out my reports and my book on there. I've been predicting a lot of stuff in those. My Australian report, I think it still makes sense for Australian to buy that report because they know what's happening right now and maybe be able to make some positions depending on the information that I put in there. And the same with my big global risk report on 2020. I was talking about the collapse in 2020 of the CLO market and corporate debt market, which is happening, which is just beyond over leverage with share buybacks and all that stuff. And of course, check out my two books back here, which is The End of Freedom, How Our Monetary System Enslaves Us, which talks about, a great extent goes into monetary history all the way back to the Greek Empire, all the way to modern era banking and so on. And of course, my book on warning about the Canadian debt crisis that we're entering in right now with, you've seen the balance sheet of Bank of Canada going out. Canada, greatest economy in the world, question mark. But the subtitle is better now because we're right in it. And it's the facts you're not being told about your money and how to protect yourself from the coming crisis that we're right in right now.
Cool. Yeah. And then for my ask, it would be, if people wanted to check out, it's actually thelibertyadvisorshow.com. It's sort of a ghetto website. I'm looking at upgrading it right now, but that's where you can find all the links to get my podcast, which I'm going to rebrand as the Tim Picciott, Liberty Advisor audio experience or something as a play on Gary V, where everything we do, whether it's Change the News, whether it's Tim and John show, whether it's Liberty Advisor show, whether it's a WHAM appearance, whether it's presentations, guest interviews, at a conference, we're all going to, it already is all there. And then probably within the next day or two, it's all going to be really nicely organized. So right now it's chronologically organized. And it's just, especially if you go back to the very, very beginning of it, it's just, just go through and read just the titles of the headlines. And, and obviously Josh was writing a lot of, ones that are, definitely out there, attention grabbing headlines, but, they were pretty warranted, given everything that's going on. And, in the beginning, I only really had, probably the first, probably until 2017, 2018, only had, about 30 of them. And, so it's not like I had 1,000. You can just, cherry picking a few of them. No, they were all pretty much on fire, but really glad to have everyone who's here, all of our new listeners. definitely appreciate it. I'm Tim Picciott, the Liberty Advisor. This is John Sneisen, the Economic Truth, signing off with, I was going to say with World Alternative Media, but no, this was the Tim and John show. I forgot what number we're already up to right now.
I think it's 7 or 8 or something.
I think it's 9, but anyway.
9, okay.
We'll see. I don't know. We'll see. I'm going to Prices Right you. I'm just going to go, or no, that'd be $1 at 1. But no, I know we're definitely not at 1, so I'll go 9, and we'll see later on what it ends up being. But thanks, guys.
Yeah.
Thanks for hanging.
Yeah, have a good one.